Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Mohamed El-Erian is definitive in game theory and thinking about the probabilities, the risk, the uncertainty of given events, including what we saw yesterday. He is advantaged by being at Queen's College, the University of Cambridge, which means he's advantaged by one of the world's great Asian programs with the leadership of Andrew Marsham, who's just absolutely definitive on these studies. Dr. El-Erian, I want to go back to Martin Feldstein just a year and a half before he died. The Japanese economy is a paradoxical mixture of prosperity and failure. Marty Feldstein was so far out front on their cyclic failure to be normal. When Japan blew up yesterday with their new policy, when they blew up yesterday, the equity market declined, how does that redound over to the American and the Western markets?
Tom, thanks for having me. And I thought we were going to go straight to the miracle of the Mets still being in the wild card chase.
That is a miracle. It was discussed this morning.
It is a miracle. Look, when you run an economy at low growth, high debt, zero interest rates, and quantitative easing for a number of decades, and that's what happened to Japan, then you get first the contrast that Marty Feldstein correctly pointed out, which is the flow numbers are awful, but the stock numbers are great. So a wealthy economy that nevertheless doesn't grow. But importantly, you encourage that wealth to go seek higher returns elsewhere. And that's what happened. The Japanese financial system became very large holders of other people's securities. Then when you change the regime and you raise interest rates, the currency appreciates, inflation comes back, suddenly people cannot refinance these positions, and either actual or perceived sales. So what happened in the last few days is a shock that started in the US, migrated to Japan. It then exposed a vulnerability that a lot of people knew about, but didn't take as seriously. And then that got amplified, and then it came back here Monday.
The thing to me that's so important here, Mohamed, and this goes back to your arch excellence in game theory, is a T decision. Japan has to make a T decision, except it's not like 10 years ago. Whaley at BlackRock says China, if they're lucky, will do 3% real GDP growth. No one's prepared for that, I understand. How does Japan adjust given the new struggling China?
So they have a financial issue and an economic issue. The financial issue will be easier. Forbearance, regulatory forbearance. So they will not force sales from their financial institutions. They will have a lot more patience with the mismatches that the financial institutions have. In terms of the real economy, they face the same issue that most countries face, which is, with the exception of the US, and even the US has a question mark over it, there isn't much growth in the global economy.
Yeah.
So they will be competing for a limited pie. And China is way ahead of other countries trying to get a bigger share of that pie.
I can't emphasize enough, Paul. Bruce Kasman at JP Morgan was brilliant on this. In a global tepidness, disinflation is the overlay that affects us.
Mohamed, when I started on Wall Street in the mid-'80s, a tour of duty in Tokyo was an absolute must. That's how important Japan was to global Wall Street. But then for the last 25 years or so, we just never talked about it. What changed in the last year or two that people like Warren Buffett are saying you really have to pay attention to Japan? What's changed?
So I think what's changed is the hypothesis that they are finally exiting multi-decades of economic mediocrity. That is, I think, what has changed. And that's why up to July, the Japanese stock market was the deer. I mean, people fell in love with the Japanese stock market in a way that they haven't done for a very long time. That is what has changed. But again, it's important, exactly what you said. Most people stop looking at Japan. So the understanding of Japan is not as deep as you'd like it to be in Wall Street.
All right, Mohamed, I'd love to get your thoughts while we have you. What did you experience yesterday? What did you see yesterday in the U.S. markets? Because, boy, yesterday morning, it was because Tom Keene was not in. The market didn't know what to do.
I took off yesterday, Mohamed. I was so stunned by the New York Mets that I needed a day of rest.
What did you make of yesterday's market action, Mohamed?
So yesterday was an example where we lost three anchors. We lost the notion of U.S. economic exceptionalism. That anchor was put in doubt with the data. We lost the notion of policy anchors because people started calling on the Fed to do an intermeeting cut. There was a lot of ridiculous things being said. And we lost Tom Keene's calm voice. So, it's incredible to see the 2-year move 20 basis points intraday. It's incredible. I got a sense, and I put this on X, that we overshot on the fixed income side. So I was quite comfortable about Treasury yields coming back. I was worried about whether credit would be contaminated. Credit was not contaminated in any meaningful sense yesterday. That was a pleasant surprise. And then I was reassured that we didn't have a market functioning problem.
With us, Mohamed El-Erian of Allianz, and of course, Queen's College, the University of Cambridge. We'll continue with Dr. El-Erian. We got green on the screen, not like we had on futures, but we'll take it. SPX up 0.4%, the VIX 32.48. That's elevated off what we know for years. Mohamed El-Erian, I want to go back to your game theory and the T decision. I take immense issue with the phrase emergency rate cut. There's no sense of history of what central banks should use. What is the T decision that Jerome Powell faces after yesterday's festivities?
The marketplace thinks it is whether to cut 25, 50, or 75 in September. That is what the marketplace thinks. I would bring you to the end of this month in Jackson Hole. He has a golden opportunity to regain control of the policy narrative. And to do that, he has to take some risk in laying out what he thinks the neutral interest rate is, in discussing, like the Bank of England has discussed, what structural changes are happening to the domestic economy and to the global economy. So for me, his T decision is actually at Jackson Hole, whether he just gives a mail-in speech or whether he tries to regain control of the policy narrative.
Well, and Mohamed, we're going to get the surveillance Gulf Stream out to get you to Jackson Hole for our coverage. Lisa Abramowicz and I will be at Jackson Hole. Wonderful. With that said, Mohamed, the heart of the matter is you mentioned BOE and particularly Lagarde's ECB, and she gave a speech last year at she wrote a paper last year at Jackson Hole on this. Mohamed, we're addicted. We're in a Greenspanian measured cadence. Does that fit the events right now? Or does Powell have to elucidate at Jackson Hole that we can lose measured and be more ad hoc, more unmeasured in our policy?
So it's really interesting because I think the Fed, being so excessively data dependent, has been actually quite ad hoc. The amount of pivots in the forward guidance we've had over the last 12 months is enormous. I actually have a slide that shows every pivot. And that's a problem because if you allow data to swing you so much, then you become an amplifier of market volatility rather than a stabilizer. So I think they need to be less ad hoc, less so data dependent, and have the courage to be strategic, have a courage to say, this is where we think the economy is going. I understand why they're not doing that. They tried it in 2021 with the famous transitory inflation call. They made a horrible mistake. And because of that, They've shied away. But that's what a central bank is supposed to do. That is what Greenspan did. That is what Bernanke did. That is what Yellen did. And I think it's important for this Fed to be not just data dependent, but also to have a forward-looking view of the economy.
That's a great point, Mohamed, because a lot of folks that we speak to, both in academia and in practice, say they're not looking at the right data. They're not looking at the real-time data. If they were looking at the real-time data, they would realize that the economy is in fact slowing, that inflation is in fact under control, and that they should be cutting rates right now. Do you go that far?
Yeah, that's where I was. I called for a cut last week.
Yep.
I've been arguing for the last 3 months that the US economy is slowing much faster than most people anticipate. Why? Because in addition to the data, I've been listening to the companies. I've been listening to what they're telling us about what they're seeing in terms of demand. They should have cut in July. They didn't. That was a mistake. They can still regain control of the narrative, but it is doing some really hard work that they need to do and having the courage to share it with the rest of us.
And look, Mohamed, we got time for one final question, and I got 8 places to go here, but I'm going to do an audible on you, Mohamed, and we've done this for years. We had a turnover of power, a graceful turnover of power in England, and now it is the United Kingdom and in England descending into riots and protest on the streets. How do you observe that? What can be the government response to a persistent rioting as we see in Starmer's England?
I think it's a two-step response. One is you first try to control the immediate situation, which is what they're trying to do. And then the second one is to look at the cause of this and the cause of the polarization and alienation of segments of the population. And it is about low, non-inclusive growth. The new Labour government has called growth a mission. They now have a growth mission. So it comes right at the top of their policy agenda. And I think that unless we start generating high, inclusive, durable, and sustainable growth, then the social and the political fabric will come under pressure.
Dr. El-Erian, thank you so much. With Queen's College, University of Cambridge, Mohamed El-Erian with an important and timely discussion, particularly there on Japan. Mandeep Singh joins us right now, Bloomberg Intelligence share buyback reporter.
Yeah.
What do you do with these companies? I mean, we got like 8 things to talk about. Who cares about Google and a federal lawsuit? Mandeep, they're sitting there fat and happy. They get an X% decline. Do they literally pick up the phone and call somebody and say, buy 6 million shares back?
Well, I think in the case of Alphabet, clearly we saw this coming in terms of, which way the judge was leaning, and the verdict is going to be what it turned out in this case. Clearly, they feel they need to change the business model in terms of paying to Apple. And look, I don't think it changes anything for Google in the sense that the search engine is still the most wanted when it comes to the user preferences. So,
do they have an appeal?
Yeah, they will appeal, and I think they'll try to come up with remedies where people can change the options for search, the default for search, easier than they are used to now, and that could be one of the
all
remedies.
I know is anything but Bing. That's my search.
Matt Miller's a Bing guy.
Matt Miller's a Bing. Lisa, tell me you're not on Bing.
No, I'm not.
Yeah, so I mean, we're like the rest of us. And Tom, the biggest issue is, the stock is absolutely unchanged on this news. That tells you, I guess, what we need to know here. But the reality is, Mandeep, this kind of reminds me of Microsoft 25 years ago. There's going to be remedies, there's going to be fixes, but at the end of the day, it just doesn't matter. Is that what investors are telling you here about Google? Yeah,
there will be a behavior change in terms of how these partnerships are done. The traffic acquisition costs, it's a $25 billion line item for Google. Now imagine if they don't have to pay, but still their product is the best. Right. Then that adds up to the gross margin. So actually there could be upside provided nothing else changes in terms of the tech component.
Is Apple a monopoly?
I think, again, there is a pending DOJ lawsuit in terms of what they do at the App Store level, and clearly they would have to change their behavior as well. But
okay, I gotta forget about all this legal stuff. I don't care. Greg Store cares. I don't care. What I care about is yesterday's tantrum. We had a VIX out 8 standard deviations. What did tech animals do at a time like this?
I think this earnings season was kind of a reaffirmation of the AI trade, that all the companies suggested they are spending more on AI, and they truly believe in this super cycle. So I think market will make that distinction in terms of what are the true AI players that will benefit in the near term versus where the valuation is stretched and the money is nowhere in sight. And you're starting to see that. I think yesterday was one of the instances where the whole market sold off, but then you saw stocks bounce very quickly because there's
is that Tim Cook buying back stock? I mean, if you liked Apple 3 weeks ago, you really liked it yesterday at 12 noon.
You did, and that's where I think the top line growth really matters in terms of what these companies deliver over the next 12 months, because not every company will be able to deliver double-digit top line growth, and I would put Apple in that penalty box where there isn't a clear path to double-digit top line growth.
It seems to me the AI story has gone from I just want to buy AI. I don't care how I get it. I'm not sure whether it's the chips or the software or whatever. Now, I think investors are starting to ask the second question, the second derivative question is, what's the return on all this investment? How do you frame that question to your investor clients that you talk to? Where is the payoff? Where do you find it in the tech stack?
Microsoft. I mean, they are the ones who are quantifying that AI contribution, $5 billion run rate out of their $80 billion cloud business. Copilot revenue, $300 million for Copilot, GitHub Copilot. So instances like this where the company is framing the AI portion accurately and giving you a runway of how they expect things to evolve, I think those are the proof points that investors are looking for.
And we're seeing it on the advertising side. I mean, I think talk to us about how AI is used by a Google, an Amazon, a Meta in terms of, giving a better advertising product.
Yeah, I mean, Meta's print earnings this quarter was another proof point of how they are leveraging AI for, more targeted ads. And it's reflected in the ASPs.
So in your experience, Mandeep, what does a guy like Zuckerberg do? Did you see his new look? He dressed up for Emily Chang.
Oh, really?
He's got the curly hair and gold chains.
I saw his new yacht. That's what I'm paying attention.
He does quite a yacht, isn't it?
Wow.
What do the players do in technology when you crater like we did yesterday? Well, they'd buy more, right?
I think, again, they have the balance sheet to both do the CapEx as well as buy back their own stock. And every company, large tech company, seem to be more shareholder friendly right now, given, they want to be better at capital allocation.
Okay. So what were you doing yesterday with the VIX at, what was it, 60, 56?
60 something, yeah.
60.
In the morning.
Look, I think there was nothing in the fundamentals to justify that kind of move, and you just sit back and see how the market
You're just having your morning tea.
How about Nvidia? What's going on with their chip? They got a problem with their chips or something?
Now that is a big risk. So this is not a recurring business like a Microsoft or the ads business.
You got to keep coming up with new chips, right?
Yeah, and the moment market suspects there is some sort of delay, that's when you see a violent reaction. Oof. So the Nvidia move didn't surprise me, but that's a risk you have when you grow triple digits off such a large base. It's very hard to keep repeating that, especially when the product cadence gets disrupted.
Mandeep, thank you so much. Mandeep Singh with us. We stopped by on technology today after what we saw yesterday. Lindsey Piegza now, she has been really a lone wolf saying rate cuts really perhaps off the mark. Dr. Piegza joins now from Stifel. Lindsey, I want to get this out of the way because I got other things to talk about this morning. You have said, slow down, we're not going to see 14 rate cuts. How do you respond to the modeled 28 rate cuts we're expecting to see by the end of the year?
Well, I think let's back up and just focus on September at this point. And a September rate cut is still a possibility and very much on the table. But if we put it in the context of what we saw in the statement. The statement suggests that the Fed remains data dependent and that policymakers are not yet convinced that the recent reports give enough confidence that inflation has moderated. So if we're just looking at the statement, that means that the Fed hasn't made a decision. It's still 50-50 at this point. And it's going to depend on the incoming inflation data.
What I see, Lindsey, is it's the third chart I looked at this morning. First one was Red Sox middle relief. Next one was on the yen. And the third chart I looked at, Dr. Piegza, was a brain freeze. I can't take a day off.
No, you can't.
It just goes.
The whole rhythm.
Lindsey, it was the whole Fed frenzy about an emergency rate cut. I got Atlanta GDP now above 2%. Do you model out GDP so weak that they've got to do an emergency rate cut?
No, I don't see that. I think this is a notion of, again, the market getting ahead of the Fed. When we look at the underlying economy, as you said, we've gained momentum from Q1 to Q2. The consumer has picked up momentum. The labor market, I concede, has lost some momentum, but it still remains, to use Powell's words, solid. Job gains are still solid. The unemployment rate is still low. And so there's nothing that suggests a level of urgency, let alone a need for the Fed to step in and provide support to the economy. Now, they certainly want to perpetuate ongoing positive conditions, which is why they are considering a near-term rate reduction. But again, if inflation does not come in as expected, it's going to be difficult for the Fed to justify that rate cut. That being said, I think the onus is on the data to convince policymakers not to move come September. So if we do see any further minimal progress, it's likely to offer enough justification to appease the market and cut rates in just about 6 weeks now.
I mean, the definition of solid, we didn't have time to talk about this because I was on a sabbatical. Paul, the Yankees took 3 games from the Phillies.
I know.
That's solid.
That's solid baseball.
Yeah.
So, Lindsey, where all this volatility started really on Friday morning when we saw the change in non-farm payrolls came in, I guess, materially weaker, noticeably weaker than expected, and the unemployment rate ticked up to 4.3%. Where's the level where the Fed really gets concerned? Maybe just taking a look at that unemployment rate. Do you think there's a level where they say, oh boy, we really need to act? Are we there yet?
We're not there yet. If you look at where the Fed is putting the full employment range, we're still well below the lower bound. And yes, we have seen month-to-month volatility in terms of hiring, but the 3-month average actually rose last month to 170,000. And we're still seeing widespread job gains across a number of different categories. So it's really hard to identify this sense of urgency or this clear sense of weakness that the market seems to be honing in on.
Recession call, is that something that, I mean, we've been talking about it for a couple of years now, but is this a 2025 event that is more than likely to occur?
Well, I think the risk of recession is still very real. I would put it in double-digit territory, around 25 to 30% when we look out to 2025 and beyond. But my bigger concern is not that the U.S. economy falls into negative territory or an outright recession, but the notion that we allow the economy to slow, but the Fed continues to tolerate above target inflation. Slow growth, elevated prices, the very definition of stagflation. That's the bigger concern for the economy, because at that point, the Fed's traditional monetary policy tools are rendered less effective in supporting the economy or taming inflation.
Lindsey, parse domestic final sales, our domestic economy, from the other noise. Off Atlanta GDP now, can you get to a domestic final sales that is recessionary?
No, certainly not. And in fact, when we strip out some of those more volatile components and we look at that core, that domestic final domestic purchases, what we see is an even stronger growth rate, up near 3%. So again, when we're talking about an economy that has accelerated in terms of underlying momentum and gained even further traction when we strip out some of those volatile trade and inventory components, it's difficult to take a 10,000-foot view and say this is an economy that needs weaker policy. This is an economy that needs Fed support. And it simply does not come justified via the data.
Paul, when you look at the data, when you take one day off, sabbatical, can you see that the economy is being supported by lazy teenagers ordering breakfast from Seamless?
Exactly.
Have you seen that GDP element?
Exactly. That's not, that is definitely an issue. So, Lindsey, on Friday, if you looked across social media, a lot of folks are coming out saying, see, I told you so. This economy's slower. It's weaker than expected. This Fed's behind the curve. They need to start cutting rates now. What do you say to those folks?
Well, I think that's the same message the market has been sending for the past 2 years, and investors have been wrong. They've been preemptively calling for an end to rate hikes and then pricing in a series of rate reductions that have yet to come to fruition. And I think, again, going back to the statement, it fell short of the market's expectations for a commitment to a September reduction. The Fed's still honing in on inflation, which they said is still elevated, and they do not expect that it will be appropriate to reduce that range until they gain greater confidence. So that means they don't have confidence at this point. And I think the market is really missing that underlying message that it's going to depend on the incoming data. And keep in mind that with less than half the year left and those base effects from 2023 likely reducing in the second half of the year, the risk is to the upside, a lack of downward momentum to gain that confidence for the committee.
Dr. Piegza, thank you so much and congratulations. The outlier brilliance, Lindsey Piegza with Jerome Powell saying, everybody calm down, we're waiting as well. She is with Stifel. Joining us now in an honor, she's given us so much. Wendy Schiller's at Brown University. And to review again, she has a definitive textbook, basically Civics 101, which years and years ago was a required read, and now in the state of our political ignorance as a nation is a must read. Wendy Schiller joins us this morning. Wendy, Spiro T. Agnew, Dan Quayle. I can't remember the vice president FDR had, that Wallace, I think it was, I'm guessing. Does it really matter who the VP is?
Well, Roosevelt also had Garner. I think it does matter in the sense of do no harm. I mean, I think that's the first principle of choosing a VP. Clearly, in my opinion, Kamala Harris chose the most, quote-unquote, neutral within the Democratic Party. In other words, nobody who had any baggage with key constituencies like the unions, like people who are very passionate about Israel, Gaza. I think that, and school choice, particularly the teachers' unions, in terms of vouchers, like Josh Shapiro. So she went with the person who will do no harm. You know, whether this is somebody who will attract more attention positively to the ticket, it's unclear. Most people haven't paid that much attention. Humphrey was a really good VP. Mondale was a really good VP. Minnesota has a pretty good, track record, but they both failed to win the presidency.
Well, thank you for that observation. Okay, let's go back to HHH and Mondale. There is a character to the progressive Democratic politics of Minnesota. Is Tim Walz a follow-on to the Germanic Democratic, what I'm going to call socialism of the 1930s, 40s, or is he removed from the heritage of Minnesota politics?
No, I think he exemplifies the heritage of Minnesota politics, particularly for Humphrey. People may not know that Humphrey actually worked hard to transform the Senate, which was dominated by very conservative Southern Democrats when he first arrived. And by the time he left, it was dominated by a more sort of northern liberal wing of the Democratic Party. So they have been transformative in a lot of ways, Minnesota politicians, because they come with a really diverse constituency. So they can speak to a lot of different people, which is probably why she chose him.
Do you see how her voice changes when she gets into the Schiller lecture mode?
Exactly.
Paul, save me here, Paul.
I pay attention. Wendy, how do you think Vice President Harris will use Mr. Walz on the campaign trail between now and the election?
Good question.
It seems to me that she made a choice, even though she didn't pick Shapiro from Pennsylvania, to really worry about Wisconsin, Michigan, and Pennsylvania. Minnesota's a neighbor to Wisconsin, and really using Walz in those states to mobilize particularly unions, but also independent voters, also rural constituents who may not be enamored with Donald Trump these days. Maybe he can go to North Carolina, which has a lot of those elements as well. But I think that's where she's probably going to center him. And she may herself try to spend more time, particularly in Nevada, where that Democratic base is powered by women of color, particularly union women of color, and Georgia, of course, where the black vote is just absolutely key to having any chance of winning it.
In the time we got left, Professor Schiller, I asked this of Joe Matthew. It's a snarky question because it's snarky out on Twitter, but I got to go there. Is Harris being told what to do by the royalty of the Democratic Party?
I have no idea, but they have leaked, whether it's strategic or not, that former President Barack Obama, has been on the phone with her, has been counseling her, and she did take, among others, David Plouffe's very high senior advisor to Obama.
What does Mr. Plouffe do for him? Does he get coffee for her? What's David Plouffe? He's been on the show many times. What does he do for the vice president?
It's swing state strategy. I mean, that's what he does, and that's what they focused on, not only in the general election, but also in the primaries against Hillary Clinton in 2008. I mean, this is their specialty, and that's what his job will be. Whether she listens to this advice is the big question I think a lot of people are asking, and we'll have to wait and see.
Wendy Schiller, thank you so much. With Brown University, the Taubman Center. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.